Hi there, welcome to another week of market trends update, and this week we will talk about the various sectors as well as the indices, and I will also give you 3 momentum trade ideas for you to think about. I'm Alvin, a CEO of Dr. Wealth, so let's begin. Disclaimer, pause and read it if you need to, but before we talk about the market, let's look at the trade ideas that I have shared with you over the last 3 weeks and let's see how they have performed. So the best performer is Eagle Bulk, which is a shipping company, and it has gained 18% since I talked about it on 17 May. And we have quite a number of gainers, and even one that is from last week, this Mercer International, which deal with pulp as well as wood products, has gained 6% as well. ExxonMobil was given 2 weeks ago, is up 5%. And the worst performer is this CF Industry, which is a fertilizer company. And from 2 weeks ago, right, the share price have gone down 7%. But overall, if you take a look at the ideas that were shared based on the momentum concept, were able to deliver a positive return, right, for a span of this last 3 weeks. So far so good. And let's look at the markets this week, as well as what are the 3 trade ideas that I want to share with you to add on to this the list of trade ideas that were shared 3 weeks ago. Okay, so let's start with the usual S&P 500 index and represented by the SPY ETF over here. And we saw some rebound, right? And then it started to range bound a bit, some volatility in the last 1 week, right? It's very indecisive whether it's going to be a bear or a bull. But overall, if you look at the larger trend, it is still trading below the moving average. So to me, the bear trend, okay, just want to be clear, is the bear trend has not end yet, and it is more likely that it is going to down than going up. Same as what I have shared in the last 3 weeks, the trend is just not favorable, right? The bigger trend when we look at that. And it's also the same for Nasdaq. Okay, Nasdaq is even more bearish, right? Yes, it saw some rebound similar to S&P 500. Yes, it's range bound for the last 1 week due to the indecisiveness between a bull and a bear. But I think the downside is still more than upside at this point in time. It's too early to call for a rebound, even for Nasdaq. And we look at the bonds, the long-term bonds, US long-term bonds more than 20 years. There was a meaningful rebound, right, as interest rate started to fall. But then interest rate rose again. Okay, the 10-year crossed that 3% mark just yesterday. And then you can see that the bond prices are reacting negatively to the interest rate again. Okay, so there is a important inflation update this week, end of this week, right? We never know how the interest rate will move, but it is definitely going to impact the bond market as well as the high growth stocks that you see in the tech sector. And look at gold. Gold has been not performing that well, and it is still testing and well supported at the 200-day moving average, right? But if it decided to break down, then the bullish trend of gold is over. Okay, so there was a rally and then it came back down and it just settled around that 200-day moving average, which serves as a strong support. So we still need more days to see how this will move. And let's move on to the sectors. The first one is materials. It managed to stay above the moving average, right? But it has been range bound for quite a while. It is not a strong trend. The momentum strength is not there. It's just slightly positive. This is not a sector that you would want to really go big into at this point in time. The next one is communication services, which includes some tech companies, right? And tech companies, as you know, has been whacked quite heavily, and that is still true for this communication services sector. It's down at the worst point. It was, let me just put it down a bit more. Okay, at the worst point, it was down 35% from the peak to the trough. Some rebound, right? As with the index, very similar profile, but the bearish trend is still there. And energy still break new high, right? Even though it has been the best performing sector for the US markets. A lot of people think that, how high can oil prices go, right? How high can the gas prices go? But somehow it just continued to rally on, continue to create new highs since we last spoken last week, right? So this trend is still intact. The bull is still very strong in the energy sector. And the next one is finance. Okay, finance is bearish, right? They have a crossover over here and prices are below the moving average. And this is worse than the utilities that we saw, not utilities, base materials that we saw just now, right? So finance is bearish. Industrial is bearish, right? Same profile as the finance, price below the moving average. There's a crossover. And next one is consumer staples. Okay, managed to still stay above the 200-day moving average, but the momentum isn't strong anymore. And we saw some of the groceries, supermarket stocks that went hammered down. So it doesn't seem as robust as the past, right? As in the past. Okay, so I don't think this is a sector that you want to really dive into at this point in time as well. Utilities, not bad. Okay, but of course energy is a lot stronger. The energy sector, but for utilities, is still relatively decent. And if you are a US based investor, you know, probably utilities is an area where you can get more dividends out of the stocks, right? But for international investor, you get a 30% dividend tax outright. It may not be a very attractive sector to look at, even though the momentum is decent. And this is healthcare. Surprisingly, it's not doing well, right? It's also on a bearish mode, and the crossover is just happening. Prices is below 200-day moving average. Last sector, this is consumer discretionary. Okay, unlike the staples, which are more robust during economic downturn or recession, right? For this consumer discretionary, is more of serving the affluent ones. Okay, and consumers have a choice, right? If let's say I don't have enough money, I will buy less of this discretionary, and it is true that this sector has not been doing well, right? It has a drawdown as well. Okay. And let's look at the agriculture, right? I want to bring this upon you. Besides just the energy, agriculture is still doing well, likely due to the war that's still ongoing between Russia and Ukraine. There is more protectionism when it comes to all these agricultural products among certain countries, right? Like I talk about India banning some of the exports. So this is also one of the bullish, we can call it sector or asset class that you might want to look at as well. Okay, and on to China. China has staged a rebound, right? You can see in the past 2 weeks, and the rebound looks promising. It has broke through some of the support, okay, or resistance if you want to call it. And now they're testing the 100-day moving average, and eventually, hopefully they can test 200-day, and we might see some rebound from China earlier than what we would expect from the US. So that is a good sign. At least there is some stocks that you can long, right? Not just always look at the US market, but if China shows strength, that's where you can move some of the capital over there as well. But it's still early days, okay? And Alibaba, at the time of recording, it was testing the $100 mark. In fact, earlier in the session, it crossed the $100 mark, but then in the afternoon, it came back down a bit, but still look promising, right? If it manages to stay above the $100 mark for more sessions, and I think that the rebound might really be in sight. Okay, but of course there will be a lot of resistance for Alibaba along the way, right? A lot of people are waiting to sell. Okay, maybe their break-even point, they felt that they hold long enough. All right, so that is the sign, a key component in the China index. And I want to also make a special mention to this stock called Meituan. It is also a tech company in China, and one of the bigger ones as well. What is significant for this is that it has rebounded almost 100% from the low. Okay, and it is one of the better rebounder, if I can call that, for Chinese companies right now. Okay, even Alibaba didn't rebound that much, right? So for Meituan, it has rebounded almost 100%, and if it maintains the trajectory, right, its price stay above the moving average, momentum start to tick up, we might see a turnaround that's coming for such stocks. Okay, so let's go to the 3 ideas that I want to share with you. And unfortunately, I won't have any stock idea. I'll be using ETFs to give you that 3 ideas this week. So the first one is this United States Natural Gas Fund. Okay, so it tracks the natural gas prices. Okay, so it is a ETF, and it makes it easier, right? You don't need to go into the futures market, deal with the contango effect, backwardation, even though actually ETFs there is some embedded effects of this, but you don't need to worry so much about it, right? You just focus on the trend, and you just buy and sell like stocks, okay? So it is near a 1-year high. It's trying to break new high, and it's very far from the moving average, right? It also makes me very uncomfortable, right? Buying at this point, you know, right at the top right edge of the chart, it just feels very expensive, right? Overextended run, a pullback might be very soon, right? I don't know, okay? So let the momentum do the work. This is one of the highest momentum ETF out there, okay, with over a 784% exponential regression, right? The higher the number, the stronger the momentum is going to be. So although intuitively it feels very expensive, but in the short term, momentum costs a short. It's not about valuation, right? So it should have more legs to go. If we zoom out a bit more, you can see that the natural gas prices was a lot higher. It has even went to $100 before, right? So at $31, if you put in perspective in a historical context, it isn't an all-time high, right? It's still way below the all-time high. So there may be more legs to go. Let's just trust momentum on this. Okay, so that's the first idea. The second idea is also commodity related, which is wheat. Okay, so it tracks the wheat prices. Again, it's an ETF for you to buy and sell easily using just your stock account. Okay, so there is some meaningful pullback, right? And seems like the war isn't ending anytime soon, and Russia, Ukraine are big wheat exporters, so that should give some price support to this commodity. And then the last one will be corn, right? Similarly, is grains, agriculture related. As I shared with you just now, the agriculture sector or asset class as a whole is still on a bullish trend. And now we are zooming in to some of these higher potential grains or higher momentum grains. Okay, so we ended up with wheat, and then we have corn at this point in time. So corn has a pullback as well, right? Pretty nice, closer. It is very unlike the natural gas that we saw just now. It's very, very far from the moving average. At least wheat and corn, they look closer. Okay, but we'll see how it goes, right? But these are the three ideas that I have for you this week. Okay, it is not stocks, it is ETF that is tracking commodity prices. First was natural gas, the second is wheat, and then the third is corn. Okay, so if in case you want to know the ticker, the first one for natural gas is UNG, and then the second one, the wheat, is WEAT, here without the H, and then corn is just corn, CORN. Alright, so I hope these trade ideas will do well in the next week or so, or even the ensuing weeks to come, and we will just do a review again when the time comes. Right, thank you for watching this video. I hope it has been enjoyable for you. I hope it has triggered some trade ideas for you as well. Okay, do remember like this video and subscribe to the channel so that you not miss any updates on these momentum trades in the future. I'll see you around. Goodbye.